What's going on, everyone? Welcome to module number 7 in this day trading course. In this module, we're going to be covering risk management and everything around that. So let's get straight into it. So risk management and position sizing. To start off, when you're trading, I would personally use the lowest risk possible on any futures brokers. So this would mean one contract per position. Now, if you're trading micro ES, would mean that 1 point equals $5. 2 points would mean $10 risk, and 3 points would mean $15 risk, and 4 points would mean $20 risk, etc. And this is all with one contract. Okay, so yeah, as you can see, you can have very, very low risk, especially when you're starting off. Now, once you've shown to be consistently profitable for multiple weeks or at least a month or two, you could increase to 2 contracts, maybe even 3 contracts, okay? Because you've shown that you're actually consistently profitable. And I know you want to speed up this process, but it's just not possible. You need to be very consistent with everything, very professional. And if you focus on the process and on getting better, you will see that the profits will start rolling in, and then automatically you will become consistently profitable and you'll be able to scale the contract sizes. So I would keep increasing the contract sizes until you get to around between 1 to 3% risk per trade of your account. Now, once it gets to this stage, you can actually just stay there and slowly compound your account. Okay, there's no need to be risking a lot more, as we're obviously scalping, so it might be possible that we have multiple trades in a single day. Now, trading risk management is another topic. Okay, so me personally, I keep my daily loss limit to 3 losses a day. Now, this doesn't happen often anymore, as right now I'm obviously very picky with which trades I decide to take, but it is a good general rule of thumb to close down your computer if you hit this maximum daily loss. And most importantly, you need to be able to respect this rule and not let emotions kick in, because many times it will happen that you have 2 or even 3 losses a day, and then all of a sudden that beautiful A plus setup kicks in, which looks beautiful to you and looks perfect, and then you say to yourself, oh my, okay, let's just do one more, it's fine, like this can make my day break even or and in profit, and then you lose again, and then you just completely in a downwards very dark spiral. Instead of having 3 losses, you end up with 4 or maybe even 5. Okay, trust me, I've been there. This is why I keep it now to 3 losses a day. The average RR that me personally I look for ranges between 2 to 6 RR. Now, I'm really not looking for anything less than 2 RR. This also all depends on the market conditions and what to really look for, explained in the targets and stop loss module. Now, obviously, if the market is very balanced, right, very rangy and moving in a small range, then it wouldn't make sense to go for these big ass targets. Okay, but if the market obviously is very trending or very volatile, you see manipulation of certain highs and lows or of the pre-market into strong demand, and the market is very volatile, a lot of volume, well then maybe yeah, you can have further targets, right? Now, as soon as I get a winning trade, I walk away and enjoy the rest of my day. Now, this could happen obviously on the first trade, the second trade, or even the third trade of the day. But it's important to not let greed come in and want for more, right? So let's say the first trade of the day is already a winning trade, and you see another opportunity happening right in front of your eyes. Well, there are chances that if you will take that you will lose it, and then you will be quite mad on yourself that you just didn't close down your computer after that win, and you could have had more gains at the end of the day instead of just keeping to trade. So just try and have a profitable trade, and as soon as you have that profitable trade, which could happen obviously as the first trade, the second trade, or the third trade, then just close down your computer, start making your recap of the whole trading session of your trades, and just close it down, and this is what it is, this is the end result of the day, and walk away. Now, a little bit of psychology on risk management. So generally, I always prefer quality over quantity, which you can also say less is more, right? It's better to focus on taking fewer high quality setups than taking on too many not great setups, right? Just keep your capital safe for the A plus setups. Now, plan everything in detail. This is very important, okay? Draw your strongest levels, wait for your confirmation, and have predefined targets drawn on your chart, right? Because you need to remove the thinking process. Because the more you think in trading, the worse it will get. Right? You cannot be thinking all the time when you're trading. Okay, it needs to be plain and simple, proper plan, where to buy or where to sell from, what confirmation you're looking at, what are you waiting for, what are the market conditions. You need to know everything already, and you need to remove all thinking of anything pretty much. Your mind needs to be empty, it needs to be like a robot. Okay, and that's why you need to have your targets also drawn on the chart, so you can immediately choose a target in a split of a second once you enter a trade. Okay, so you don't have to start analyzing, okay, maybe here, oh, maybe there. No, that's not good. Have your targets already drawn on the chart, so as soon as you enter the trade, you say, okay, this is an area where price might reverse, this is where I get my target. Now, you have to really be okay with missing a trade. Okay, fear of missing out is obviously a big thing in trading, but you have to get to a point where you really accept missing out on a trade. Okay, missing out on a trade is no big deal. It's not going to change your life, that one trade. You're not going to become a millionaire and buy a Lambo just because you lost this one trade. Okay, there will always be new trades pretty much every single day. And I know it sounds easy, but I can tell you that after many, many unnecessary losses, it's just so much better to miss out on trades than just burning money on setups that are not A plus. Okay, so it might happen that it comes to your level, the confirmation is not really there, it's not the cleanest, and the market just reacts super aggressive from your level, and you missed it. Okay, well, you need to accept that. Well, your confirmation wasn't there, so this is why you didn't enter the trade, and that's fine. The market just didn't want to give you an opportunity to enter. Okay, that's not to say that you shouldn't be analyzing what exactly happened in that level and why it reacted the way it did. That's also good, always good to do. Always analyze and see maybe another pattern that happens, and maybe save it for the future or see if it happens more often, so you can maybe add that to your confirmation patterns. But it's honestly really okay, guys. Like, you cannot catch all moves. It's just literally impossible to catch all moves. You will miss trades. Sometimes it will happen. It's just a fact, and you need to be okay with it. And lastly, you need to really accept that losses are part of the game and you just cannot avoid them. But it's always important as well to review them and learn from them. Okay, so there is no one strategy in the world that has a 100% win rate. Yes, I've seen people with 80% win rate, 85% win rate. It is possible to have a very high win rate. It's not easy, but it is possible. But 100% win rate will just never happen. You will make mistakes, or sometimes a trade will just not work out. Okay, it's just part of the game, and you really need to accept that losses are the cost of doing business and trading. And the best you can do is try and learn from them. And how do you learn from them? Is by reviewing them in detail. What happened? Maybe you misread the market, or maybe your timing was wrong, or you completely messed it up on your entry, or there was maybe a news event that you didn't realize at that time and it just spiked you out. So it's important to learn from your losses and try to keep them always at a minimum, so you can always have a better and better win rate in the future. All right. So anyways, guys, this was the risk management module. It was not a long one, but this is pretty much everything that I know and have a process with for risk management. So hope you guys like this video, and we'll see you in the next module.